You're now tuned in to the Desire to Trade podcast, a show where we bring you the best figures of the trading world and teach you how you can become a successful trader. This is your host, Etienne Cret.
Welcome guys, it's Khat here from DesireToTrade.com. Now today I have a really special guest on the podcast as always, and this guest has been featured a couple of places. He's the author of Trade Mindfully. He's been an active trader since 1999. He's focusing on how to build mental skill to trade successfully. So I have Gary Dayton with me today. Hi Gary, what's going on?
Eddie, nice to be here. Thanks for inviting me in.
Well, I'm really happy to have you because it's been kind of a hard time to schedule the interview. I know you're really busy with a lot of stuff. So can you tell us a little bit what's going on these days?
Mostly these days, I'm finishing up a project that I've been working on that's related to fear. It'll talk to traders in similar ways in which the book, my book talks to them, but also add some new elements, particularly new mindfulness skills that have been used in the U.S. military to help combat veterans deal with anxiety in their deployment, going over to like Afghanistan or to Iraq. And particularly, it hasn't been used in actual combat situations yet, but it was used in the war games that train combat soldiers to work effectively in combat situations. And the findings were pretty robust. So I'm integrating that into a new video program, and I've been working on that quite a bit.
That's pretty interesting. So apart from that, I know as I said, you've written the book Trade Mindfully. Could you tell us a little bit what's in that book? What's the main topic of it?
Sure. The conventional wisdom in trading and trading psychology is that traders have to get a handle on their emotions. They've got to suppress them. They have to trade more or less like robots or like computers. And it's probably a function of the computer age that we tend to treat the mind as a computer. But that's not really true, and it's not really possible. I've been involved in psychology for over 20 years now. And I've never met a single person who was able to control their emotions on a consistent basis, ever. That's been not only in my work as a trading psychologist, but also as a clinical psychologist. So the reality is we're not able to control our emotions. And in fact, the more we try to do it, the worse they become. In other words, the more we try to suppress or get rid of or manage or manipulate in some way strong emotions, in particular like fear or anger or greed or boredom, any of those that can really influence our trading. The reality is they become worse. The mind, it's almost like we give a command to the mind that says, let's have no fear here. And the mind starts saying, okay, no fear, no problem, and starts to monitor any little semblance of anxiety or any little twitch of discomfort. The mind will immediately bring it to our attention and say, fear is on the horizon here. And so the more we try to not have it, the more we have it. So most of the book, Trade Mindfully, is discussing this and giving traders practical, hands-on exercises to, instead of trying to suppress and control fear and other strong emotions, to deal with them much, much more effectively. And the primary way to do that is through the practice of mindfulness. Not an easy thing to do, but a very effective thing to do in trying to deal with trading psychology and trading emotions. That's the main part of the book. The other part of the book is dealing with the process of getting really good in trading. I was fortunate to be able to work with a sports psychologist who's well known here in the U.S. and actually is the sports psychologist for the Cleveland Indians Major League Baseball team. And right now it's early winter here, and so it's basketball season. and he's also the sports psychologist for the Cleveland Cavaliers basketball team. And I worked with him when I was at university, and I've taken basically his model of sports psychology and using the mind to get better in sport and I've brought it into trading. So we use the mind and specific psychological techniques to develop ourselves as traders and develop our trading performance and try to bring that up to a level of excellence. So that's basically what the book is about.
Okay. I've heard a couple of times the comparison of sport and trading. So could you explain a little bit what's the similarities of it?
Sure. Well, obviously, the difference is that we're not running or shooting baskets or hitting a tennis ball when we're trading. So there's no athleticism involved, but just about everything else is very, very similar. The mental processes are almost identical. The performance aspects are almost identical. The things that athletes do to prepare and execute and then evaluate their game, traders can do that as well to great benefit. And the arena that we operate in, well, obviously we're not sitting in a stadium or running on a field in a stadium where there's crowds of people around, but the same mental environment that exists in athletics and sport exists in trading as well. So the better we can become with our mind by using some of the techniques that sports psychology has developed since the 1970s, when it really started to take off, we can benefit as traders by using those same kinds of techniques and methods.
Mm-hmm. Now, we definitely have to go back to mindfulness and how to apply it. But before, I just want to ask you, how did you start trading?
Well, it's not an unusual story. I was working on my psychology degree, and I was coming to the end of it. One day in the mail, I got a pamphlet. It's probably about 30 or 40 pages, and basically it was a marketing program. I didn't realize that at the time. But it was about trading and how you could buy low and sell high in 3 easy steps. It took him 30 or 40 pages to describe that. But so I should have known it wasn't all that easy. But I read it and I thought, oh, this is terrific. So I sent away for the program. I don't remember, it cost some amount of money. And I got it a few days later, and I was so fascinated by it. I read it twice in the same sitting. I stayed up all night reading it. Not once, but 2 times, and then started to apply it. And I was fairly successful to begin with, first couple of trades, but then started to lose money. And I realized at that point that psychology was just as important, if not more so, as the technical side of the game. And so that's basically how I got involved in it. And it took me probably 4 or 5 years before I got really good at it. I had to do what every other retail trader does. Traders who work for a firm off of a trading desk, they have a different experience. But the average retail trader has the same experience that I had, which is to go through all different kinds of methods, from basic indicators like MACD and stochastics to more sophisticated indicators like no lag type moving averages and oscillators, to things like Elliott wave analysis and radar signal to noise processing kinds of algorithms, all these different kinds of things. And in fact, what I finally settled on was just the opposite of all of that. One day I was so frustrated, I cleared my computer screens, all my charts of chart jewelry, all the indicators that I had on there, and just started to focus on the price bars and the volume, looking at supply and demand through the Wyckoff perspective. Richard Wyckoff wrote about technical analysis, one of the very first to do so in the early 1900s. And I began to study his work. And it was at that point that my trading began to get consistently successful and consistently profitable.
And just for the listener, what is the Wyckoff technique in simple terms?
Well, it's assessing supply and demand all the time in the market. Who's in control? Is it buyers or is it sellers? Wyckoff was most interested in the big operators of his day, people like Jesse Livermore and E.I. Harriman and Jay Gould and some of those folks who swung a big line. In other words, they had a lot of money. They controlled a lot of capital, either through their own accounts or when they were working for pools of investors. But I don't look at it quite that way. The markets have expanded quite a bit. There's thousands and thousands, probably millions and millions of traders every day operating in the markets. And it's, we don't have access to the kinds of information that Wyckoff had. He was also a broker and talked with other brokers. And they'd sit around having a drink at the end of the day, and Wyckoff would say Jesse Livermore was buying shares of Reading Railroad from my office. And somebody else, one of his friends would say, who was also a broker, buying, well, he sold in my office. And Wyckoff began to piece together these manipulations that the large operators were doing. And he was able to read it in the price action by charting the daily highs and lows and the volume. And so he was always concerned about the large operators. I'm not so concerned about that. I'm just concerned about who's in control. Is it buyers or is it sellers? And you can read that in the price action of the market.
Mm-hmm. That's interesting. And I think the other interesting thing is your background, because you've been studying in psychology. So when you started trading, could you apply some of these things you were learning in psychology at university, or was it completely different for you?
No, it was completely different. I thought I knew psychology, and I thought I was pretty good at it, that I was learning in university and that I was applying. I was a clinical psychologist, which means that I worked with people who had real psychological and psychiatric problems, people who would have, carry diagnoses like anxiety disorder or depression or psychotic disorder, schizophrenia, things like that. And while the things that I learned in clinical psychology were useful, and the techniques that I learned were also useful, they didn't quite do it for me in trading. I began to realize that fear was a very big part of it. And clinical psychology doesn't always address fear all that well. It does give techniques like for anxiety and the fear of say, meeting somebody, for example, and ways to overcome that. And some of that is used in my work today. But I had to really kind of look at it from a much more holistic point of view. And when I started to look at that and I started to look at the literature, looking at the research, I also recognized that it wasn't just emotions that got us in trouble, things like fear and greed and that sort of stuff. But it was the way that we thought as well. Our natural way of thinking gets us in big trouble. A lot of times, and we don't even realize it because the way we think is the way we think, and that seems natural. And when we apply that to trading, we run into all kinds of problems. The technical terms for that are things like cognitive biases and heuristics that Dan Kahneman and his partner Amos Tversky, who died a few years ago, but Kahneman won the Nobel Prize for his work in biased thinking. And it's at that point when I began to look at that, then I began to understand this whole field of trading psychology is a little bit different than just clinical psychology, and it has to incorporate how we think as well.
Could you give us an example of cognitive biases or the way we think and how it affects our trading?
Sure. Let's say you and I are traveling on down a road in a village that we're not familiar with, and it's 6 p.m. in the evening, and we're hungry, and we need to find a spot to eat. And so we're driving along and we see a restaurant on the side of the road, and we notice that there's a few cars in the parking lot. The building looks attractive. It's got nice planting and landscape, and there's a few people coming out the door and they're smiling and laughing. And we say to her, we look at each other, and I say to you, Eddie, this looks like a great place to eat. And you agree, and so we stop in and we go go into the restaurant to have some dinner. But notice what we did there. We made our decision in a kind of a shorthand way. We didn't go in and look at the menu. We didn't interview the patrons coming out the door to say, was this a good spot to eat? What did you have? Kind of matching it what we were with their responses to what we wanted to eat. We didn't go in and ask the chef, could we have a sample of the food to try before we went in? We just made the decision based on appearance. The restaurant looked inviting, so we went in. Now that's okay in picking a restaurant and other kinds of everyday decisions. But when it comes to trading, let's take a look at it from the perspective of a trader who's looking at his or her chart and suddenly sees a bull flag showing up on the chart. And of course, a bull flag is a pattern, a continuation pattern that says that the bull trend or the uptrend will continue. So the trader sees this pullback as a flag pattern and says, this is a great trade setup. I'm going to go long. And so they buy the market. Now, it may be a good decision, but it may not be a good decision. All the trader is doing is basing the decision to go long on the appearance of the pattern in the chart. Just like the appearance of a pleasant pattern, an agreeable pattern for the restaurant, it's the same thing in a bull flag. That bull flag may very well be, if the trend has been going on for a while, it could be the top of the trend. If there's higher time frame resistance, let's say we're trading off of a daily chart, for example, and monthly resistance is right there, right overhead, that bull flag could be the beginning of selling or supply coming into the market. But we wouldn't know that just by basing our decision on appearance. And that's the trouble with cognitive biases. We are biased or prone to make the easy decision. Oh, it's a bull flag. It looks good. Let's go take a long trade. Just like we made the easy decision to say, this looks like a good restaurant. Let's stop and eat here. The harder decision would have been to interview the patrons or to sample the food. The harder decision in trading would be to say, okay, a bull flag pattern here, but let's look at the higher time frame. Let's assess this trend. Are we overbought up here? Is there higher time frame resistance that will likely bring in selling and supply? But we don't usually do that. What we do is we see the bull flag and we make a snap decision and go take a long trade position. But that's the problem with the way we normally think.
And I feel like this can apply to a lot of other situations, right? Because I think a few weeks ago I caught myself looking at candlestick patterns, and I think the big problem was to realize that emotion were really transforming the way I could see candlestick, and that's hard to believe, but it's really true.
It is absolutely true, and candlestick patterns is one of my favorite. People always say to me, how come you don't use candles? Because I just look at the high, low, and close. I ignore the open, and I don't need the open for the kind of trading that I do. And people look at that, and it's how can you do that? Why aren't you using candlesticks? And one of the problems, I certainly studied candlesticks, looked at Nissen's books and studied them very carefully. And candlesticks, I have nothing against them, don't get me wrong. But the problem that with candlesticks is that people look at, a doji or three dancing crows or whatever the pattern happens to be, a bullish engulfing pattern or a dark cloud cover. And they say, oh, this is a dark cloud cover, let's go short. And it's the same kind of bias that we have. It's that we see the pattern. No question, we see the pattern. That's the easy part. The tough part is, are we sitting on that dark cloud cover? Is that sitting on top of very strong support? Because if we go short on that and there is strong support, I don't care what the candlestick pattern looks like, it's gonna run in the opposite direction, and you're gonna get stopped out. You're gonna get hurt, and then the market seems fearful at that point. We actually teach ourselves to become afraid by being unskilled in the way we think and unskilled in the way we trade, by looking at a candlestick pattern or looking at a bull flag pattern and just going with that and saying that's good enough. And then we get hurt. We get stopped out, and stops are painful. There's no question about it. And then the idea of loss aversion comes in, and the research on that is pretty robust. We've seen this this is what Dan Kahneman and Amos Tversky, the two psychologists I mentioned a little bit earlier, this is what they started with. They began to realize that, as Dan Kahneman would say, losses loom larger than gains, meaning that psychologically, if we have a loss of, let's say we have a win of $1,000, well, that feels really good, right? We just won $1,000. We're proud. We're happy. We're on top of the world. If we have a loss of $1,000, it doesn't just feel like we lost 1,000. It actually feels something like the psychological magnitude, if you will, is like $2,000, maybe $2,500. It's 2 to 2.5 times the amount of the gain of equal size. So that's what he means by losses loom larger than gains. And if we're unskilled in the way we think and we're unskilled in the way that we trade, we are going to experience losses, because basically we're trading randomly, not skillfully. And because losses do psychologically loom larger than gains, we're going to scare ourselves about the market. And then it becomes, I'll give you an example of a trader I worked with. Every time he sat down, happened to be a he, every time he sat down to trade and turned on his charting platform, his blood pressure would start to skyrocket. We put a biofeedback type machine on him and measured his blood pressure. He just basically conditioned himself to become afraid of the market, and it was seen every time he turned on the screen, because of this combination of unskillful trading, unskillful thinking, and this natural tendency we have towards loss aversion. And it becomes really problematic.
Mm-hmm. Now, is this the same reason why people tend to also cut their losses too early, let's say?
Yeah, loss aversion is a funny thing. Other research has done some terrific work in this area, and we tend to cut winning trades short, and the flip side of that is we let losing trades run. But the underlying reason for both is because we're trying to avoid loss. And it sounds kind of funny, but I mean, you can understand why cutting winning trades short, we're avoiding loss. As soon as the market starts to tick back against us, we want to get out of the trade because we're afraid of a loss. But when a losing trade is in play, sometimes we add to the losing position thinking that it'll come back up and we get out a little bit quicker at break even. Or we just hold on hoping that the market will come back to break even. That happens all the time in trading with a lot of traders. And it's all about not taking the loss. They're looking to avoid the loss.
Mm-hmm. Now, one solution for this, I feel like it's having checklists and having rules and everything. But I feel like you have another solution, right, with mindfulness.
Yeah, because look at it this way. Let's take this idea of cutting a winning trade short, because that's every trader has done this or does this. So they're in a good trade. All their conditions set up, and they've got a nice trade on their hands, a nice setup. So they take the trade, and they start to get gains. They make, let's say we're trading the S&Ps, the E-mini S&P, and we rally up for, let's say, 3 points, and we're feeling really good. Now, our objective is, say, 8 points but now the market at 3 points starts to back up. And we had 3 points. Now we're down to 2.5 points profit. Now it's down to 2 points profit. And the mind will start telling us, oh, Gary, you better get out of the trade. It's so much better to make a couple of points. I know your objective is 8 points, but you don't want to have a loss. You don't want to lose the 2 points that you've got. So let's take the trade off now. You might even try to, if you've been doing this for a while and you've been cutting winning trade short, you might even try to hold on and say, no, I'm not going to do it this time. But then your mind starts to really scream at you, and you can feel the tension throughout your body. I know for me, it goes right to my shoulders. My shoulders are going up into my ears, and I get a queasy stomach, and my hands start to get sweaty. My mouth gets a little bit dry. All those physiological symptoms that we have around fear. And it's very hard to hang on to a trade when we're feeling that, and the mind is telling us, get out. It's better to have, 2 points rather than no points or a loss. And so we get out. And what happens? We immediately feel relief. All the tension drains down, right? We're feeling pretty good. Okay, well, I booked 2 points. That's good. I got a little profit on this. But then, this is the experience of virtually everybody. The market starts going back up in our direction. And it goes back up 3 points, 4 points, 5, 8 points, might even go beyond 8 points. Okay. And we're not in the trade now. We're standing on the side. We were in the trade a few moments ago, but now we've cut our winning trade short, and now it's really winning and going to our objective. Well, what's the mind telling us now? If it's like my mind and other traders that I've worked with, the mind is now chastising us, saying, oh, Gary, you idiot. Why did you get out of the trade? You were in a good trade. You knew it was good. You got out. You only got 2 points. And now look at the market. It's up 9.5 points. You could have made a lot of money from this. And so how do we feel? We feel crappy. We feel down. We feel blue about this, depressed. Okay, that's the experience that most traders have about cutting winning trade short. But here's the thing that they never ask. Which mind was right? Was it the mind a few moments ago telling us to get out of the trade because we're going to have a loss? Or was it the mind that's now telling us we were idiots for getting out of the trade and we're never going to learn how to trade, and making us feel bad? Okay? Traders never ask this question, and the answer is neither mind was correct. And this is where mindfulness comes into play. Mindfulness teaches us to step back from our thoughts and our feelings and the physiological sensations of the shoulders and the queasy stomach and all of that. It teaches us that we don't have to buy into those thoughts. We don't have to believe them. We can step back and make decisions based on what's really the best thing to do for the trade or us as traders, not what our feelings are telling us or our mind is telling us. That's a big, big difference.
Now, I feel like this is really easy to talk about, but how is it in practice to apply?
Really difficult.
Yeah, right.
Yeah, it is. And this is why trading is so difficult.
Mm-hmm.
If all the trading was to figure out a few patterns and trade those, everybody would be a winner. Everybody would be enormously successful. Well, it's not that. I mean, the markets are much more complicated, much more complex than that. And it's us acting on our trade setups that adds even greater complexity. So no, it's not easy to do. But if you want to be able to do this, if you want to be able to trade, then this is certainly a clear and proven way to do it. And think about all the stuff traders, all your listeners as traders, especially if they haven't been successful yet, and especially if they've been doing this now for a couple of years or so. Here's my invitation to you. You have to base this on your own experience. Don't take my word for it, because I'm just me. Go with your experience. That's the important thing. But here's what I would invite your listeners to do. Kind of think through all the things that you've done to try to avoid these losses and to get rid of the fear that you've got. Maybe you've read self-help books. Maybe you've tried to improve your indicator. Maybe you've changed markets. Maybe you've studied your technical analysis. Maybe you've worked with a trading psychologist. Maybe you've gone to the local pub or village bar and had a few glasses of wine or a few beers to calm down your anxiety. Maybe you've joined a chat room. List out all the things that you've done. I'm being very serious about this. Go through all the things that you've tried to get to be successful in trading, and particularly to get rid of this fear if you're cutting winning trades short or doing other fear-based activities, and see if they work. And go through and sort of do a cost-benefit analysis. What have you gained out of it short term? And what have you gained out of it long term? And what have you lost long term? And I'll almost guarantee you this is what you're going to find. Short term, you've gained relief. And this is from all of the things that you've tried. Short term, you've gained relief. You've calmed yourself down. Long term, you've missed trades, you've missed profits, you've gotten into bad trades, there's no real long-term benefit, in other words. It's all been cost, all at the expense of making yourself feel better. And this is the key thing. You need to understand that comfort is not something we're going to strive for here in trading. But what we will strive for is to be able to handle discomfort, the tense feelings that I was describing before, the unwanted thoughts that we have, that we're going to have a loss, the uncomfortable, fearful emotions. Through mindfulness, we learn to step back from that stuff. And there may be a storm going on inside of us, but we can still do what's correct for that trade and what's correct for ourselves as traders. And the more we do that, the less the storm inside of us affects us. So it's not easy to do. I'm not trying to tell you or your listeners that this is an easy thing. It's not. It really isn't. It's a very difficult thing to do. But by the same token, it's not impossible either. And if you are committed to trading and committed to becoming a successful, profitable, consistent trader, and you go through your own assessment and you look at all the things that you've done and you realize none of this stuff has worked, then you might take a look at mindfulness and at other techniques that I talk about in the book, like diffusion and how to step back from our thoughts and feelings so that they're not so troublesome. And you might make the commitment to work this through and try this and see if it doesn't work for you.
Yeah, so I feel like, as you said, it's really being comfortable with being uncomfortable, right? So trying to be there and act even though we feel something, right?
Exactly.
Okay.
And an interesting thing, Tim Borkin, have you ever interviewed him, Etienne? Yeah, he's a good fellow to interview. He's a really nice guy. He was in the U.S. He was one of the co-founders of the Traders Expo. He's a trader himself, and he's just an overall nice guy. And he wrote a book called Traders at Work. And it was published last year in 2014. And he went around and interviewed about, I think it was 200 highly successful traders, very profitable traders, all different kinds of methodologies, all different kinds of trading venues. Some were working off of a trading desk. A lot of them were retail traders. Different markets, from stocks to commodities and currencies. And he kind of took his interview and created 20 or so different elements that he believed from his interviews created success in these traders. And one was fascinating, and that was that even after 20 years of experience sitting in a trading chair, those successful traders still, even with 15, 20, 25 years of experience, still became uncomfortable in trades. But they learned through their own ways how to deal with that discomfort. And so it's kind of what I said at the beginning here, that I never met anybody who could control their emotions. And you don't want to anyway. Emotions are valuable. There are times when we do have to get out of a trade because it is going to turn into a loss. And our emotions are going to be able to tell us that that's a good time that's what we need to do. So you don't want to control them and get rid of them. That's just foolish. That's what we would say is poppycock. It's nonsense. What Tim found was that these traders figured out a way to deal with the discomfort, and they still have it, but they know that it's going to come and it's going to go on its own accord, and that it's not something to base a trading decision on. And so what my book is all about is trying to accelerate that process for traders using, the current cutting edge or state of the art in psychology to go ahead and do that.
Mm-hmm. Now, personally, how do you deal with this discomfort?
Same way I describe in the book. I mean, I'm very mindful about it. I have one of the things that I'll talk about, that I'll do in this new program that I'm developing, are anchors or anchor points in mindfulness. They use this with the military, and they found that teaching the soldiers how to anchor their mind helped them even in the storm of combat exercises. And it's very effective. It's very, very useful tool to use. And in fact, sports psychology and even Buddhist psychology from the Buddha, 2,600 years ago or so, they developed this idea of anchoring. So it's not necessarily a new thing, but it's the newness is in how to apply it in trading. And I use that a lot when I become fearful. And, look, I'm a trader been trading since 1999, so about 15 years of trading. 10 of those years have been good, solid, consistent trading. I'm a psychologist who has a doctorate in psychology from a university here in the U.S., a good university in the U.S., and I understand psychology, I think, pretty well, and I keep up on it and study it and stuff, and I still get afraid in the markets. Okay, I get afraid, and I know that that if somebody like me who has these kinds of skill sets, which are a little unusual, both trading psychology and trading, and he still gets afraid, then most people are going to get afraid. But the difference is I know how to handle it, and it's not trying to control or get rid of the fear, but it's being mindful with it.
Yeah, because there are so many things happening in the market. You have no choice to get comfortable handling those reactions, I suppose.
Well, yeah, we don't want to be reacting. We want to be responding. And I think there are two different. I think there are different.
Could you explain the difference between these two terms, or?
Yeah, when we see something in the market and we analyze it and we say, okay, our response ought to be this, and so we respond that way. When we react, something happens in the market and it's almost like we don't think about it. Suddenly we pull the trigger on a trade, or pull the trigger on getting out of a trade, or don't bother to, don't hesitate on taking the trade. Reaction is much more emotion driven. Responding, in my judgment, involves emotions, but it also involves good, clear, high quality thinking before we get ourselves into a trade or before we get ourselves out of a trade. So that's how I see the difference. And we want to be responsive, not reactive.
Mm-hmm. Yeah, no, your book is definitely a must-read. Trade Mindfully. I guess it's going to be on my list definitely for me to read, for sure.
I hope you like it.
Yeah, no, definitely. And I think people should check it out also, Trade Mindfully. It's available. Is it available online on your website, or?
Yeah, we don't sell it directly. It's on my website, Trading Psychology Edge. You can find a link to it, and it'll bring you to Amazon here in the U.S. But as I understand it, it's in most other Amazons. Like if you're in the UK or in Australia or in France, you can get it through that locale. You don't have to pay the extra shipping and what have you. But yeah, it's available. Oh, the other thing I would say is that, when we did the book, it was published with Wiley. It's part of their trading series. And there's limitations in the book because they didn't have all the space that I would have liked to be able to. There's a lot of exercises that are involved in the book. And there are forms. And they didn't have the space to put in all the forms. So you can download, and there's no charge for this. It's totally free. Off of my website, on the book page, you can download all the forms in the book. And we also recorded a couple of guided mindfulness exercises that are also in the book, but you can download those in MP3 format as well. Just on my website, www.tradingpsychologyedge.com. I occasionally speak at Traders Expos here in the U.S. Once in a while I get over to London or down into Australia to speak there. Singapore I've been to, and Malaysia. So occasionally you'll see me out, but the easiest way is through my website.
Wonderful. So what goals do you have for the future?
Well, the book took a lot out of me. It took me 3 years to write, and I really did put my heart and soul into it. Of course, a book is a static thing. I didn't realize this as I was writing it. Surely didn't feel static when I was in the throes of putting it together. But I've actually learned new things. It was published in the very late 2014, actually January 2015. But it was available a month before that. So it's been out for a year. And, nothing stands still. Everything changes. Nothing is finite or fixed. And I've learned new things. And as I said, I'm developing a new fear-based program for traders. After we finish that, we'll also be doing something else I've learned over the past year, which is how to use some of the techniques in the book and others to develop mental agility. I had presented this at the Traders Expo this year in Las Vegas as a master, I forget what they call them, some sort of master series in trading. And we had 25 traders in the room, and I presented it to them, and they liked it quite a bit. And it's fairly simple way of using mindfulness, a very effective way of using mindfulness that was developed by a friend of mine, a psychologist friend of mine. And I was just there not even a month ago, 2 or 3 weeks ago, up to his office in Maine, and learning some more things from him. And then I take that and I apply it to trading. So those are some new things. And on the website, I'm always talking about trading psychology, and also always talking about the Wyckoff method and showing examples of the Wyckoff method on the various markets, mostly the S&Ps, which is what I trade pretty much day in and day out, but other markets as well. So that you can your listeners can take advantage of that too. The blog that I put up.
Definitely. And yeah, it looks like there's a lot going on for you, but I just want to remind the listeners now that the show notes for this podcast are going to be on thisarttotrade.com. So you can simply go on thisarttotrade.com, type in Gary Dayton, and you'll see the show notes for this podcast. Now, Gary, I have one last question for you, which is, if you could give only one piece of advice for new traders on how they can improve their trading right now, what would that one piece of advice be?
Practice. Practice, 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 and practice some more. And not just the technical side, but put a lot of emphasis and practice on the mental side as well. Traders think that, and I did this too. It's so easy. All you have to do is buy low and sell high, but it really isn't. And you really need to go through and practice. And I hear traders tell me all the time, hey, if it doesn't have money behind it, it's not worth it. I'm not interested. And my response is, well, if you don't have the mental fortitude to be able to trade, simulation trade or paper trade or practice trade without money on the line, man, you're not going to be able to, you don't have the mental fortitude to trade with real money either. And so I think that is a really, really important thing to do, is to practice as much as you can.
Whether that's backtesting, demo, or anything, right?
Absolutely right.
Cool. Well, thanks so much, Gary, for being part of the Desire to Trade podcast, and I'll see you guys in the next episode.
Yeah, Etienne, thank you. It's been really fun.
Awesome.
Thanks for listening to the Desire to Trade podcast. To get all the information on this show, free articles, and unique resources, make sure to check out www.desirettotrade.com and subscribe. Please leave us a review and let us know what you thought about the show. It's time to become the best trader you can be. See you next time.